Good evening and Happy New Year to one and all. I'm Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, and we are now at the 30th of December. It's hard I'm saying that. I can't believe it. 30th of December, 2024, and the time right now, I believe we're at 6:40, getting on to 6:40 p.m. Central Time. The big question, we had a big down on a Monday. Are we going to get a Tuesday reversal? That's what I'm looking to see if it happens. I'm not calling for it to happen, but I'm looking at it. And if it does get a reversal of any size, you might get that carry through where Santa is just going to show up at the last minute. If not, well, then the Grinch stole Santa away from us, and the Grinch has Christmas. So there's 2 days left, if you think about it. You've got tomorrow, the 31st, and where does this end? The Santa Claus rally, in theory, from Yale Hirsch ends on the 2nd of January. Not Friday, that would be Thursday. That's why I say you've got 2 days left to see if the Grinch stole the month or not, or the Santa Claus rally. Remember, the Moore Research Report, it's still going from the 17th of December till January 12th, where out of the past 15 years, it's produced a profit from close to close during that period. Past performance is, again, not indicative of future performance, but it's a good tool to see, and it's a good tool to get an idea about. Now, on January 3rd, we have another issue coming up. Who's going to be Speaker of the House? President Trump today threw his weight behind Speaker Johnson, which is a good thing. The question is, how much does it mean with the different Republicans that might sway one way or the other? And if he's not elected, who the heck wants the job? This is a real thankless job. You have a razor-thin margin. Who's ever Speaker of the House is going to be on a hot seat the whole time. It's going to be a rough go for it. That is the way that you look at it. We'll see what the markets think of that. Why don't we take a look at the data that's coming out in the morning tomorrow? And remember, I have a sale that I want to talk to you about at the end of this. It ends this week. So if you're serious about learning my charting technique, this is the best deal you're going to get from me, and I doubt I'll repeat it, period, again. Redbook Group is going to update their weekly retail sales data at 7:55. The Case-Shiller 20 metro home price areas for October. Now remember, that's October, so it's almost 8 weeks later. So that's going to come in at 8 o'clock in the morning. It's been running, as you know, with increases year over year, but it started falling back month over month. I don't know if that's going to hold up or not, because we just saw pending home sales jump in the month of November. So maybe people are just finally saying, and maybe this report doesn't show it yet, maybe they're just saying mortgage rates aren't going to go down that much. I've got to bite the bullet. I need to get that house. It's very possible. The API will come out with their weekly member stockpile data on Tuesday. I was wrong when I thought that we were closing early tomorrow. My mistake. Completely read wrong what I sent out to everybody. There are normal trade hours tomorrow at the Merck and the stock markets. The markets close tomorrow at 4 p.m. in the futures markets. They reopen Wednesday night at 5 p.m. in most, not all markets. Grains typically don't open then. You won't open in the meat markets. The soft markets have their own different from the ICE exchange, but the vast majority of trade will open at 5 p.m. on Wednesday night. We'll see what goes. But Tuesday night's the big party night tomorrow. That's why I thought we would get time off, and apparently we're not. And then we get our trade right after that, as you know, Wednesday night, right into the close Friday. All right. So let's take a look and see what we've got here. You had a hard down day, and you came back off those lows, not to close higher, but you didn't pursue the market in a big way. I'm going to repeat. Do we get a Tuesday reversal? Often, whichever way you get a big move on a Monday, you try to reverse some of that on a Tuesday in stock indices. Don't know if that'll be there or not, but it's something to look at. Sugar failed at some key numbers today. The dollar index gained a little bit, 14 points. It tried to rally, couldn't hold, and that's the part that was the surprise, I think, to a lot of traders today in stock indices, that here we are at a normal time of the year where history shows more times than not, by quite a bit, you try to rally right at the end of the year, and we're getting the opposite. Could it be, and it's very possible, that we've got excessive PE ratios? Could it be that a 2-year rally is saying, hey, maybe this market needs to see some rotation out of stocks right now? Possible. But often, why would you sell your stocks right now if you haven't done it already and to pay tax in April? A lot of people will put that off a little bit, and that gives you the beginning of the January impacts where you rally and then you start slipping back a little bit. And that's what I think more tries to take advantage of on that mid-January peak that they so often claim they see. We'll see. When we look at the S&P, the one thing that is evident, when you go to a weekly close, you are still over the 18-week average, so the bias of the market, as I define bias, is up. If a market closes over the 18-week average, I use that as a filter. And I say, all right, that has me in the buy mode, not the sell mode. Next, I look to see what the plain bar chart is doing. Some people use candlestick. I happen to like these charts for me. When I look at them, I'm looking for a pattern. I don't see a pattern. I see a lower low and a higher high. That's not a trend. I guess you can call it a no trend pattern if you wanted to be with it, but I like a pattern to be bearish or bullish, and this to me is just a lot of nothing to deal with right now. This could turn bullish if the market doesn't take out the lows here and were to take out today's high, or I should say yesterday's high. Remember, we're already into Tuesday. So if the market were to take out 60, 35, 50 before and not take out 50, 918 and a quarter, well, that could give me the pattern of higher lows and higher highs. Where would the resistance be? If that happened, the 60.72 level, the 18-day average of closes. If the market doesn't do that, one of the support areas is 58.93, the 100-day average, combined with the lower Bollinger Band, which you hit today and you held. I think you'd agree with that. You went through this, if you think about it, about a week ago and came roaring back from it up to the 18-day average. We'll see if that has the power to hold. Momentum is down, bias is down, and you're void of a trend. The onus is on the bull. The bear has taken over short-term, I think, control of the market at this point. When we take a look at the NASDAQ, it's the same. You have that lower and low, higher high, momentum down, bias down. And again, attacked the Bollinger Band, held it, attacked it, and came back from there. What about in the Dow? Well, you went to the 100-day average and got a bounce. This is the move back to it today. Is it going to attack it tonight? And in the Russell, you've been staying under the 100-day. I think the problem for the market is, can it hold 22.13? It is very oversold. None of these markets are trending. That's, to me, very important. They've got the higher high, lower low, and it's very evident. Thinner trade, that you can see the volume. You don't need my opinion on that. It's the way it is. And the market, each rally is getting sold into as people are liquidating. When you look at the 10-year notes, the market is trying to give you a bounce. Now, I'm watching tonight. Notice the numbers over 22. If you close like that, it's, to me, an indication that before the market goes for the most recent low, I think it'll make a run for the 18-day average if it can close. And the word is settle, close, over 21 tomorrow. 5-year note doing the same. So that could give, if the markets were to see that yields are falling tomorrow, that could offer the stock market a potential reason to stop the decline. I'm not saying it's going to rally. We'll see if Santa can cause that. When we come to the dollar index, outside day up, what I don't want to see is the lows of today taken out. If they're not taken out, the odds still favor you might make a run to the upper Bollinger Band. The euro had an outside day down, so unless you take out the high of today, I can make an argument for the market to try to work lower. What I don't like is the market's already in oversold territory and it's not trending. It has a higher high, lower and low setup. In the British pound, this is, to me at least, a bear market rally that could carry up to the 126 and a quarter area. We'll see if the Bank of England talks the game that they've been talking, where they're leaning into rate cuts to spur the economy along. That's going to be important. In January, Bitcoin, this is a market that was just up to the 109,000 level, and today we got down to 91,725. If you'll recall, when the market was getting there in the D's contract, I said you often get 20% breaks out of big moves in the Bitcoin, and that's what you're getting. You're in a downtrend, you're at support, and you're oversold. Not a great spot that I see to go short from. When you look at the crude oil, you've got a lower low and a vertical price rise right into the upper Bollinger Band. It fought for 3 sessions, including today, at the 100-day average, and it won out, but it is overbought, and it's at the upper Bollinger Band where it's had a history of failing from. So we'll see if that happens again. WTI's in a stronger position with the higher lows, higher highs, and it might even get a crossover here that's bullish, where the 18-day average gets over the 100. The dilemma is you're up at the upper Bollinger Band. If you clear that with any verve, well, maybe the 200-day at 72.69, another 150 points comes into play. It's an overbought market that hasn't yet begun the embedding process. In the heating oil market, a lower low and a higher high, cold weather vortex coming in. I don't know if you saw today what natural gas is. It took off to the upside, and one of the reasons that it took off so much, 2 elements here. First, Ukraine, as of January 1st, as it stands right now, it's not going to allow Russian gas to travel through the pipeline that Slovakia and other countries have been relying on. It's not like they just said they're not going to do this. They have made it very clear as they're in this war, they don't want to give Russia money. Now, if there could be a way to get that gas and it didn't go to Russia, maybe there'd be a last-minute settlement. But barring that, that's bullish the market. And now, if you've watched your weather, the U.S. is in store along with Europe for a cold weather vortex about to sweep down from the Arctic, and as that comes through, that will get some demand. We haven't really had a really cold winter yet. It's due. So January and February, you know they're cold months. The flip comes in March as the market can be anything. It can be 70 degrees in the Midwest. It can be below 0. I've seen both, all right? So that is how it is if you live here. But you're in the change at that point in time. Remember, there's a kid, those April showers. Oh, you know all the poems. So you pay attention to that and see where you're going to go. Now, as I told you, I have a sale that is ending this week. And it's really simple. My full charting software, where I teach you swing lines and make you do them yourself. I teach you to work with Bollinger Bands. I give you the concept trade in that. I tell you how to work with window envelopes. What are they? Slow stochastics, the moving averages. Normally my course goes for $5.99. I lowered the price by about half, as you can see, $299.95. But the kicker is you can choose from either the Bollinger Band course or the outside day course, where both independently sell for $120 a piece. So you get that knocked down, you get that. And then, of course, you get the charting software, access to the research that we have, the mobile app that you'll need that you can keep up with quotes and everything that I'm doing from there. I think you'll find it absolutely fascinating. This is just an idea of the values that we threw in. There's $596 in value. We added them up. We see what we think they are. And here's the beauty. You can bank the course. In other words, you can buy it now, take it when you got time. If it's not convenient right now, we'll honor that. You can give it away as a gift. You can give either one away as a gift and keep one for yourself. We make it easy. The idea here is to learn, to be able to do a lot of this on your own and at least understand the concepts. Go to iraepstein.com. You'll see on the top left the New Year's charting sale, or you can move your cursor up here to get it done. This will end, and you're not going to see this particular type of sale again. It's too deep of a discount. I'm Ira. You take care.